There have been three major trading opportunities available for Ethereum since the month of May. In this video, I'm going to show you exactly what those were, how we found them, and what you can do in the future to replicate these types of trades. Let me tell you, in these three trades, you could have earned over 19% profit. We're going to jump into the tutorial real quick, but before we get started, I want to let you know you can get all of the indicators, all the trading tools you need to make this happen in the links in the description below. Right now, you can grab the TC top and bottom finder, price versus while money flow, and trend exhaustion for up to $450 off for our July 4th sale running this week. This ends on Friday, July 7th, and there's only 50 total coupons available, and they are running out, so do not miss out. The time limit and the quantity limit is coming up real quick. With that, let's jump into the video. So this is a super easy strategy to follow. I'm going to give you your entry strategy, your exit strategy, and a risk management strategy that we like to use here at Trade Confident. And before we get started, I got to let you know this is not financial advice. I'm not telling you to take any trades. I'm not telling you that this is even going to work 100% of the time. No trader has 100% win rate. Our scalping trades are currently 40 wins, 0 losses for 2023. That is in part thanks to our crazy risk management strategy that I'll show you in this video. But there are times like we saw last year in 2022 with the Luna crash that sometimes it's just not viable to hold on to trades. So with that, we actually ended up with over 100 trade wins last year with only 1 loss. With that, let me show you how it works. First things first, I'm looking at Ethereum on the 1-day time frame, again using the TC top bottom finder, price versus while money flow, and trend exhaustion indicators. The first indicator that I'm looking at is the price versus while money flow. This is the one I'm tracking because it itself tracks the flow of whale money. Where whale money goes, the price is likely to go too, and that's why it's so important to keep track. You'll see it oscillate back and forth, and that's because as it moves down, it means whales are taking money out of the market. They're selling out, and this will usually see the price move down. However, you'll notice as they begin moving money back into the market, the line's going to move up, and you'll see a price increase at the same time. Typically, when it bottoms out, this is when whales have oversold and will begin buying back in. Once it tops out, that's when whales have overbought and are going to begin selling out of the market. So essentially, when we see a low on the price versus while money flow local to where it had been at the time, this is my first indication of a possible entry. We got that right here, a low on the price versus while money flow. It did go lower eventually, but at the time, this was actually pretty low. From there, I'm looking at the trend exhaustion. Rather than the flow of money, we're actually tracking momentum with this indicator. So as this drops, you're going to see massive momentum to the downside that eventually diminishes as we hit the bottom. This will reflect on the trend exhaustion with the white line in the bottom of its chart. In the bottom red section right here, when you see it bottom out right here, this is typically when we're going to see the bottom of the trend. Both of these combine to be extremely bullish. Whenever we see this, this is where we're looking for moves back up in the market. It happens extremely consistently, as you'll see throughout the rest of this video. Last but not least, after that, we're just looking for a buy signal. Then and only then, when we get all three of these signals, are we entering our trades. There are going to be times where you won't get a buy signal, that you'll still see moves up, but if you get all three of these, it's considered one of the safest possible trades because it's hard to get all three of these lined up without something crazy happening. So right here, we got price versus while money flow low, we got trend exhaustion low, we got a buy signal. Great entry right there, and from there we saw a very nice move up. Now for our exit, it's actually going to be the exact opposite. You're going to want to see price versus while money flow high because that means whales have overbought and are likely to begin moving money out of the market. You're going to be looking for a trend exhaustion high. This means that the uptrend has likely exhausted its momentum, and then you're going to be looking for a sell signal. Now in some of my tutorials, I'm not always looking for a sell signal. Most often the price versus while money flow high and trend exhaustion are enough, but you'll see here on Ethereum, the TC top and bottom finder is calling crazy consistent signals for the top. So right here, we got a sell signal, price versus while money flow high, trend exhaustion high, and that is our exit. You'll notice here that this has happened 3 times since the month of May. We got an entry possibility, and then later on, just a few days later, we got an exit possibility. Now, because these signals post on candle close, we go from the top right here of the buy signal to the bottom right here of the sell signal. This was only about a 1.71% profit. However, profit is profit. And what we're going to do from there is take any profit that we made from there and reintroduce it into the next trade. Let's say you enter this trade and then you exit. You make that 1.17% profit. When you're calculating it, it'll look like this, 1.0171. Enter, you just earned $171. Now, this may not sound like a lot starting with a $10,000 entry, but after that, what you're going to do here, you'll notice here, we saw price versus while money flow low, trend exhaustion low with a buy signal. Great entry right here. And later on, just a few days later, we saw price versus while money flow high, trend exhaustion was high, at least locally, and then we got a sell signal. All three of these will combine to be a great exit, and from there you would have earned a 4.51% profit. Now, rather than investing the original $10,000, we're actually going to invest that $10,000 plus the profit from the original trade. So multiply by 1.0451, enter, and you're at this point $629 in profit. Congratulations, that is a beautiful trade. That's going to be just over a $450 win. Awesome. You're going to do it again. Just wait here until we see price versus while money flow low, bottom out right there, bottom right there on the trend exhaustion with a buy signal. All three of these are going to be bullish, great entry, and then we're going to wait for price versus while money flow to be high locally, trend exhaustion to be high locally, and then a sell signal. This ended up being a 12.26% trade win. So we go multiply by 1.1226. That puts us at $1,932.91 in profit. Now, with this trading strategy, this means this was a 19.32% profit. Absolutely incredible. And I want to show you something. Reinvesting these profits is called compound investing. So we're going to list this up here, 19.32% profit. Now what we're going to do over here, we're going to clear this out, and instead of reinvesting, we're going to act as if we just made each of these profits individually. So 1.71 plus 4.51 plus 12.26. This comes out to only 18.48% profit. So 18.48%. We're going to subtract the original 19.32% profit, flip that into a positive, and what this means is you got an extra 0.84% profit here. Now, I know it doesn't sound like a lot, but this is going to add up very quickly over time. Let's say you got another trade win right here and invested the $11,932. This is going to be a lot more profit than if you had just invested that $10,000. This creates a snowball effect, and the more you win, the more profit potential you're going to have because you're trading with larger and larger amounts. This is how we maximize our profit overall. So you have our entry strategy with price versus while money flow low, trend exhaustion low, and buy signal. You have our exit strategy with price versus while money flow high, trend exhaustion high, and a sell signal. This is very, very consistent. And again, I want to reiterate, on some coins, you won't see sell signals. Oftentimes, just the price versus while money flow high and trend exhaustion high is enough to call an exit. However, I personally like to look for all three signals for my entries. From there, I want to talk to you about risk management, because this is arguably one of the most important parts of a trade. This risk management strategy is how we've earned our 40 wins, 0 losses in 2023 for our membership scalping trades. You can get access to those scalping trades at the links in the description down below. On the TC top and bottom finder, there's an option to enable market order, buy limit 1, buy limit 2. You'll also see options for buy limit 3 and a show take profit. For now, we're just going to use these three middle options. Go ahead and click OK. If we scoot it over here, you're going to see a market order line at the current price, a buy limit 1 below that, and a buy limit 2 at the very bottom. What you're going to do here, rather than investing your entire amount into a market order, is instead you're actually going to split it into 3 equal parts. Let's say the amount that you're wanting to put towards a trade is about $30,000. What you're going to do here is, when you're ready to enter, when you get price versus while money flow low, when you get trend exhaustion low and a buy signal, you would put the first $10,000 on your market order. Now, if it moves up, great. Just look for price versus while money flow high, trend exhaustion high, and ideally a sell signal for that exit, and you should be good to go. But sometimes it'll just happen. Sometimes whales will decide to tank the market further, or something bad happens and everyone exits out, and the price drops like crazy. That's okay, because what you've done here is put another $10,000 right here in a buy limit order, which what this means is if it crosses below this, it's going to automatically purchase at the price you set. You're going to set the other $10,000 here at the second buy limit. Now, what this is going to do is, as the price drops, if it crosses below this buy limit, I already told you it's going to buy at that level. But the reason this is important is you're now going to have a much lower break-even point. So instead of the price having to jump all the way back up to this level, currently $1,878, you'll have to go somewhere in between here. It'll only be about $1,600, somewhere in that range. On top of the lower break-even point, you now have over twice as many coins invested, which means on top of having a lower price to break even, You're going to get into profit faster with that. You also have twice the amount of profit potential because you have more invested. Now, let's say the price manages to drop all the way below this second buy limit. If the price of Ethereum drops to $1,000, this would be catastrophic, and the second buy limit is usually just there for worst case scenarios. But let's say it does. Now the price is only going to have to jump to just over $1,400 here. This is a much lower point, and you'll have 3 times the amount that you originally had in your beginning trade. So what this means is either the price moves up and you win instantly, or the price goes down, you get into a much better position with more money invested for the price move up. So that way it's just a win-win overall. Now, I will tell you, sometimes it will take quite a while to come back into profit, but from what we've seen, we've always had successful trades, with the only exception being Luna, which essentially became a completely dead coin. If you're trading with major coins like Bitcoin, Ethereum, anything like that, you should see great success using this strategy. Again, this is not financial advice. I'm not a financial advisor, but I'll show you some testimonies in just a minute. These indicators are absolutely crazy and are making our clients tons and tons of money. If you want to get these indicators and try them out for yourself, now is the time to do it. The $450 discount is about to end. You have until tomorrow, June 7th, or until the 50 coupons actually run out. If either of those pass, the sale is over. Whichever one comes first, do not miss out. Whether it's quantity or a time limit, you need to grab these indicators as soon as possible. All you got to do is click the links in the description down below. Just go ahead and scroll down, click show more, and the indicators will be the very first link. Click that. It'll bring you to our indicator page. I want to show you this. I'm really proud of our traders. This person earned 16% using these indicators. If you're on the fence about buying the paid stuff, do it. Really appreciate the testimonial there. Thank you so much. This person made over $9,000 with their account up 39%. This person made $950 in one day. I go over these quite a bit. Let's go lower. This person made back the cost of the indicators within 2 hours of purchase. This person was up $5,000 in the past 2 weeks. $2,000 in a matter of hours. It's crazy what our traders are able to do. If you want to get these indicators, the best deal is going to be to purchase the bundle pack first, because on top of 9 total indicators, including the trend exhaustion and price versus money flow, this bundle pack will include the $400 off coupon for the TC top and bottom finder, the final indicator you need for this style of trading. When you check out with this, be sure to use code SAVEME50 for $50 off. Let me show you how to do it real quick. Just click this checkout link, click I want this. When entering the discount code, make sure to use caps locks. It's SAVEME50. Click apply. There's your first $50 off. From there, just fill out your information, click pay, and you'll get that $400 off the TC top and bottom finder. Click add to cart. That's your full $450 off all 11 of Trade Confidence indicators. Make sure your information is correct, click pay, and you are good to go. From there, one last time, when you're looking to enter your trades, it's price versus while money flow low, trend exhaustion low with a buy signal. And once you're looking to exit, you're looking for price versus while money flow high, trend exhaustion high at least, and then ideally a sell signal. Don't forget your risk management. That's extremely important and is very conveniently built into the TC top and bottom finder. With that, thanks so much for watching. Trade safe, trade confident, and I will see you in the next video.